So, a lot has been going on lately with the global market witnessing a major drawback. Dow Jones futures tumbled along with S&P 500 futures and Nasdaq futures as Russian President Vladimir Putin launched a military attack in Ukraine on multiple fronts. This happened despite President Joe Biden saying that there will be further consequences versus Russia. But then at the moment, we're only looking at sanctions being imposed. Well, for investors, this crisis is one to watch as the stock market has been seriously impacted. Bond yields took a dive while crude oil surged and gold futures rallied. Any long term spike in energy prices could exacerbate soaring inflation in the U.S. and complicate the Federal Reserve's path for multiple interest rate increases this year. Central bankers need to weigh the possibility of even stronger price pressures, which could argue for more aggressive hikes against a knock on the economy and markets, which could argue for a more gradual tightening. On the other hand, the ailing stock market tried to bounce but then sold off hard with the Dow Jones, S&P 500, and Nasdaq undercutting their January 24th lows. As the Russia-Ukraine conflict unfolds, the U.S. will definitely be a key stakeholder. The world will be waiting to see whether the West will intervene in the conflict. Well, for us, it's about how the stock market, particularly Tesla stock, will be affected. The U.S. could impose far-reaching economic sanctions on Russia's banks and energy sector. The Biden administration signaled that it's gearing up to impose technology export bans on Russia, among other penalties, if there was a further invasion of Ukraine. European and other major allies also are likely to step up sanctions significantly. We'll talk about these sanctions when they come, but right now, let's find out how seriously Tesla stock has been affected. Now, Tesla was the S&P 500's worst performer as of February the 24th, tumbling below 2022 lows after failing to reclaim key support. Recent investors should already be out, but even long-term Tesla stockholders might have to consider scaling out. After closing below its 200-day line, Tesla stock briefly reclaimed that key level before reversing lower. The relative strength line for Tesla stock has fallen to the lowest level since October. We've seen how other EV stocks have fallen to troubling figures, so we can probably understand if it's about the recent happenings in the world. Well, no one can certainly stop a war if the parties involved aren't willing to do so. Now, until this conflict ends, investors should expect a crucial impact on the global stock market. But the question is, how did we quickly transition from self-inflicted issues to the Russia-Ukraine conflict being the major driving force in the Tesla stock trajectory? Looking back, Tesla delivered great fourth quarter numbers and should have a strong 2022 as production continues to ramp up even as chip woes still limit overall auto industry output. The lack of new Tesla models in 2022, after CEO Elon Musk had promised a product roadmap, has disappointed investors. But the bigger issue is the weak market environment. That's particularly true of growth stocks, with highly valued names like Tesla stock hit especially hard. Anyone who bought Tesla breaking out of the big cup base with a 900.5 buy point should have sold long ago. If you bought at various buy points in the 700s, it's past time to be out and locking in remaining profits. Don't let huge gains round trip and turn into a loss. We believe that a good investor knows when to quit the market, and right now, with everything that's been happening, investors should have locked in the remaining profits. But what about investors who bought Tesla stock long ago and are sitting on huge winnings? Your patience and conviction have paid off big time in the past 2 years. It's certainly possible that Tesla stock will soon rebound and make another leg higher. But at some point, huge winners like Tesla stock end their run and begin to break down. So investors need to have an exit strategy. Your exit points will vary based on the size of your position and percentage gains, your general risk tolerance, and your conviction in the stock. Tesla stock is now 8% below its 200-day line. A decisive break here would leave no obvious support level until the 2021 lows of around 540 to 550. If shares can't rebound by the end of the month, long-term investors may want to consider reducing their Tesla stock holdings. The risks only grow as the broader market starts to break to new lows. Now, the stock market tried to bounce on February the 23rd, but that quickly fizzled as Russia's invasion fears again came to the fore. The Nasdaq Composite, up more than 1% soon after the open, quickly reversed, ultimately tumbling to below its January 24th low. The S&P 500 and Dow Jones also undercut their January 24th lows. Ever since the S&P 500 and Nasdaq closed below the low of their January 31st follow-through days, the market rally outlook was bleak. Since then, the major indexes continue to rack up more distribution days of high-volume selling. It wouldn't be surprising to see the market rebound in the near future after so many down sessions, but even a few good days wouldn't necessarily signal a clear revival. For now, the major indexes seem poised to begin another leg down as the Russian invasion of Ukraine triggers a new wave of selling. So few stocks are setting up right now, and that's especially true in growth. What more needs to be said? The stock market looks terrible, with the major indexes breaking below late January lows after several warning signs. Every day, the reasons to stay invested dwindle. The only exceptions are pockets of market strength or long-term winners. But even with long-term winners such as Tesla stock, investors have to scale out or cash out at some point. The Russian invasion of Ukraine and the West's response will likely roil markets in the coming days, with perhaps far-reaching economic consequences. Investors should not get caught up in the morning bounce frenzy or even a couple of good days. People should actually wait for convincing signs of market strength. That includes leading stocks setting up and flashing buy signals. For now, keep your exposure minimal or be entirely in cash. Stay engaged and prepared by watching the market action and reworking your watch lists. Now, Wall Street has a knack for always sniffing out an investing opportunity even when the news headlines are dire. Look no further than the rally in defense stocks following Russia's invasion of Ukraine. Further escalation in the ongoing geopolitical conflict would likely have a positive impact on the prices of defense sector stocks. Investors have been flocking to security stocks due to expectations they could attract more business from consumers and corporations worried about possible Russian cyber attacks following new sanctions imposed by the United States and Europe. And now Tesla investors should ask themselves why anyone would let such a good investment opportunity pass them. Well, eventually the war will definitely end, but now is not the time to hold on to a sinking ship. We've seen how deep the cryptocurrency ship is sinking. And any investor who is holding on thinking that there would be a recent bounce back must be racking up serious losses. We're not saying that investors should abandon all the stocks that are dipping, but it's important to at least recognize the current global crisis being caused by the Russia-Ukraine war. However, if there are any lingering doubts about how aggressive the Federal Reserve might be at its upcoming meeting in a few weeks, Vladimir Putin probably just erased them. The Fed has a policy session on March 16th and is expected to raise interest rates for the first time since 2018 after cutting them to zero at the start of the pandemic in March 2020. Because of inflation concerns, many economists and investors were predicting that the Fed could go big and raise rates by a half percentage point to try and fight rising consumer prices. But Russia's invasion of Ukraine has likely changed that calculus. At least there's some positive news despite the stock market being negatively impacted. Anyway, we might have to wait a bit longer to find out what happens next. Be on the lookout for more videos like this. If you enjoyed the video, remember to like, share, and subscribe. Stay safe, and we'll see you next time.